ready to rock. So welcome everyone. Great to have you here. As many of you may know, I've been an Aeromir person for a long time, and then I've taught for a number of other companies, etc. And then I started teaching some things on Aeromir last year. And anyhow, so I've just kind of grown from there. So my presentation today is going to be largely around trading butterflies specifically. So let me just kind of start marching through my stuff here. And obviously, anytime you're dealing with the financial goodies, you've got all the disclaimers. So here are all the disclaimers. I am not a financial advisor. I'm not making any trade recommendations. And this is probably the most important part right here. Each person, trader, is responsible for their own investments and their own trades. So just have to, of course, put that stuff out there. So I'm going to actually stop my video. I don't think you need to see my face through all of this, but I just wanted to say hello to everyone. Wanted to give you a little background kind of on myself. Again, I've been a long-term member of Aeromir and been a coach and instructor there at Aeromir at different times. I've got 30 years of trading stock, options, futures, and commodities, and I guess you could also toss real estate on there. With the exception of my family, if it moves, I trade it, is kind of what it boils down to. And I've probably made every mistake in the book. So one of the things that I try to do with my students is I want to share with them all of the things that I've run into over the years, and hopefully I can keep some of them from making the same mistakes that I have made over the years. Kind of save them the grief, if you will. I've taught for one of the largest trading education firms on the planet. I used to teach live classes in California and Hawaii for them. I loved doing it. Then, of course, COVID hit, all that sort of shut down. And then I started kind of teaching online, and that's when Tom invited me to do some classes and stuff at Aeromir, which was awesome. I've spent the last couple of years helping Option Alpha in launching their new auto trading platform. I also am a contributing educational trader with OptionStrat. I don't know if you're familiar with them or not, but they got a very interesting piece of software as well. And then also helping Charles, Option Trader's assistant, and kind of fine-tuning their product a little bit, just kind of making suggestions, comments, ideas along the way. And am a very avid user of Option Trader's Assistant, love the product, and you're going to see it here today in a lot of the different things that I trade. So this is kind of what I'm all about personally. My family on the upper left, they all live within a couple blocks of me, so love that. My wife and I tour a lot on motorcycle. The bottom picture there is Alaska. The top one is New Zealand, Mount Cook. And so that's kind of what I like to do. And this is me at my trading desk. So just so people have kind of a general idea of who I am, what I do, etc. So during the course of our session today, I will be sharing some things predominantly from Option Trader's Assistant. Maybe we'll see a little bit on Thinkorswim, but those are probably going to be the couple that might show up here with what we're doing today. So I want to provide kind of a brief overview of butterfly trading, why I feel the butterfly is one of the best trades for new and experienced income traders. I'm going to give you an overview of the class that I just wrapped up last week. It's 7+ hours that really go deep into butterflies. Also, my alert service, X% winners. I'm going to hold that out. You're going to get to see that a little bit later as to what those results look like, because I'll be pulling up some reports for you. And then I'm going to have a special offer for Aeromir because, of course, Aeromir kind of launched my online educational content. Prior to that, I'd always been in classes in San Diego, LA, and Hawaii. So this is a little bit new to me, the whole online thing, but Tom has been very helpful in kind of making it happen. Levels of trading. So over the years that I've been trading, there's a number of different, and I haven't heard other people describe it this way, by the way, but I find this to be pretty I think hopefully you'll find it accurate. So there's what I call two-dimensional trading, which is buying and selling stock or futures or whatever it is. It's kind of a trade that, if you're in it and it goes your direction, you're going to make money, okay? So you're only going to make money if you buy low, sell high, or sell high, buy low, essentially shorting. Then there's what I call three-dimensional trading. That's when you get into, various options spreads, including butterflies. And here you have the trades are not as directionally motivated. They tend to make their profit and or loss a little more off of time decay and shifts in volatility. So I'll call this three-dimensional trading because we're not only looking at the underlying going up or down, but we're also looking at those dimensions of time and volatility and how those come into play as well. And then we're not going to touch on this today, but there's what I call four-dimensional trading. And the reason I got to this is, although I haven't played it and I probably wouldn't know how to play it, four-dimensional chess I've seen before. And this is where you bring in the time spread factor. So you not only have the underlying movement, but then you also have time decay and volatility, but then you also have this time spread in between. Later in the year, I'm going to be doing a class that's going to focus on calendars and diagonals and how unusual they are to trade. But you're going to see some examples of those today as well, because in my alert service, we do trade those quite a bit around earnings. And I'll be showing you some of those results today. So the first thing, why focus on butterflies? Why, what kind of brought me to the butterfly world? Well, a number of years back, one of my fellow instructors at this large educational firm I worked at, he was a hedge fund manager out of Canada, and he manages a pretty sizable fund up there. And he was showing me how pretty much all he trades for his fund is butterflies and to some extent calendars and diagonals. And so prior to that, I mainly traded iron condors and variations of iron condors. I liked Amy's asymmetrical iron condor, for example. So I looked at a lot of different trades like that, were kind of my go-to trades back then. But after finding the butterfly, that's been pretty much all I've done since then. I find it to be a very flexible, very versatile options trade. It's a great trade for new traders because, we'll get into the reasons here in a moment, and also for experienced income traders. It has a lower risk and a higher reward than many of the other standard options trades out there. The way I build them, they have a very wide profit zone. They're pretty slow moving. So what I mean by that, now, those of you in the Aeromir world here that have been trading the zero DTEs, this is not zero DTE. Let me be very clear on that. So the ones that I'm trading are much further out in time. And sometimes it can be kind of like watching paint dry, but they're very, very consistent. You'll see the results here in a bit when we get to that. They don't require a lot of attention and focus for me during the day. I trade, 6:30. I'm based in California, so when the market opens at 6:30, I'll put on some trades, adjust some trades, etc. Then I go out and I do a bike ride or a walk or hike or whatever, and then I come back and check in an hour and a half before the close. And if anything needs adjusting, I'll kind of put out some adjustments to the group at that time. But for the most part, I don't like to set up my screen. I was a day trader for a number of years. And for me personally, that's just not my mentality anymore. I don't know. I just kind of got out of it. I didn't like the anxiety and the big swings that would come with that. The other thing I like about butterflies is they're highly scalable to meet each trader's needs. I do trade predominantly SPX. And in the class, we analyze a whole bunch of different underlines. And I very clearly point out why SPX is my go-to tool, if you will. So let's talk about the anatomy of a fly. And if this is below a lot of people here, I apologize. I really wanted to break this down to the core level so that people kind of understand what a butterfly is. Now, keep in mind, I'm not trading iron butterflies. Iron butterflies are slightly easier to understand because you have a put spread and you have a call spread and you're selling both of them. And there's a reason that I don't normally do iron butterflies. And again, we get into that in the class as well. I'm not going to go down that side road here. Just suffice it to say that I tend to focus on mainly all put butterflies. So what does that mean? Well, I wanted to show here what a butterfly might look like if our market here is at roughly 40.50 in this case. It's actually 40.46 as you can see there. I would sell essentially an at-the-money put, and then I'm buying a put further out at the 4,000 mark. So that's what the two look like separately. Now, of course, we put that on as a vertical, and when we put that together as a vertical, selling the 40.50, buying the 4,000, we end up with an $18 credit. So that's what this side of a butterfly would look like. Then on the upper side of the butterfly, we are buying a put spread. So we are buying the 4,100, we are selling a 40.50, which of course is the exact same strike we're selling here, and the combination of those two is going to cost me $23. So I'm selling one spread for $18, I'm buying a different spread for $23. So of course you put that together and your butterfly is going to cost you $5 to get into, okay? So these are the two spreads right here that make this up, that make up that $5 debit. And this is in SPX. So, and that again is the main vehicle that we trade for a variety of reasons. Better tax treatment on your profits is one of them. But anyhow, so what I also want to make very, very clear, and one of the things that I consider to be one of the biggest values of a butterfly, is that when volatility increases, the cost of these butterflies decreases, okay? So the risk reward gets much, much better when volatility gets higher. So your risk in a butterfly is what you pay for it. So in this prior screen here, if I get into this butterfly, I'm paying $5 or $500. So my maximum risk in this trade is $500 for a one lot. Now here, when volatility was higher, I could enter this exact same trade for $2.30. So my maximum risk now is $230. So that's one of the things I like about butterflies. When the market gets a little wacky, when it gets a little crazy, a lot of people head for the hills. They're like, yeah, I'm not going to trade this market. This market's too nutty for me. But that's when you want to jump in and understand how to use these butterflies to your advantage. So again, I want to kind of stress the point. When IV becomes elevated, put butterflies will become cheaper because the elevated price of the at-the-money puts that we're selling short, that's essentially what helps those butterflies be cheaper. It gives us a significant edge because the reward to risk profile of this trade has shifted dramatically in our favor. So we can do a couple of things in this situation. We can either increase the number of flies that we're going to put on, or we can keep the same size and just have a better profile in our, a better risk to reward profile in our trade. So those are the couple things to consider. And in our class, we talk about what percent of your account you should consider using in certain volatility conditions, etc. But as a general guideline or a rule of thumb, right now, for example, in my account, with volatility being a little lower, I'm only using 25 to 30% of my account right now. When volatility was higher, when it was in the 20 to 25 range, I might have been using 40 to 55% of the account. And then when you get up into that 30 range, I might be using 75% of the account. And the main reason for that is volatility is largely a mean reverting thing, meaning that volatility doesn't stay high for a long period of time. Even if we go back and look at COVID days, for example, the early days of COVID, when people were thinking, oh my gosh, the world's coming to an end, volatility was up very high. It did stay there for a pretty decent period of time. I mean, a few weeks at least. But then, even though COVID didn't go away, as people's mindset started to adapt to the concept of, yeah, okay, I can't leave my house, I can't, go to the grocery store, I can't go to the movie theater anymore, whatever, but people kind of fell into a little bit of a new norm to where some of that initial panic or fear started to subside. And even though COVID as an event was still out there in full force, the fear in the markets started to drip back out of it. So even if you have a really bizarre and very scary event like that, once human nature starts to accept the new reality, volatility tends to come back out. So that's why when we have higher volatility, we tend to load up more of these with that expectation that volatility will drip out. Now, I showed you a flat fly a moment ago, a 50-point wing butterfly. I want to show you kind of the same analysis on a broken wing butterfly. So broken wing butterfly, same configuration, except we usually will tend to trade a 60-50 broken wing. That means our put spread is 60 points wide. Our call spread is still the same 50 points wide. The combination of those two gives us something like this. So we have very little upside risk in this particular butterfly. We have a largely flat T0 line, and we can get into this trade for $1.50 debit. So if the volatility gets a little higher on this trade, you can actually enter this broken wing fly for a credit. Now, if you enter for a credit, that essentially means you have no upside risk. So if the market were to rip up 1,000 points, you still have no risk on the upside. You will at least, if the market rips up 1,000 points and you never touch this trade, you're going to at least lock in $80 per butterfly of profit. So these are the types of trades that I like to put on, particularly if you get a little bit of fear in the market or a little bit of a market pullback. They tend to become very forgiving trades. And as you can see how flat that T0 line is, our market can go up 100, 200 points. It can go down 100, 200 points. It's going to have limited impact on our P&L. And that's why I talk about these sometimes being like watching paint dry. They literally just slowly grind away, theta decaying, doing their thing. So here's just to kind of drive that point home, I'm going to show the price of some butterflies in different market conditions. Now, these are all essentially the same butterfly. These are all SPX flies. This is VIX in the 15 range. I'm putting them on 30 days to expiration, 50-point wings. In this case, I've got the upper strike. The upper long is going to be at the current market. But I'm just going to show you a few different variations of this so you can have a better sense of this. So in this case, this trade is going to cost me $305 to get into. We can see down here it's a $3.05 credit. Our maximum reward, the peak of the tent, which we're not shooting for, I want to be very clear on that. I don't hold these close to expiration. I'm never intending to try to get up in here anywhere, but I am using this as a measure of risk to reward in the trade to know when I feel it's a good trade and when I'm not so sure about it. In this case, the risk to reward ratio is 15.39. Now let's look at the same trade. Everything about this is essentially the same, but the VIX is 22 at this point instead of 15. Now I can get into this trade for $2.75. So $275 is my total risk. This is my maximum reward. I now have a 17.18 reward to risk ratio. So let's take it a little further. Let's get all the way up to 30 in VIX. Same essential trade. I can now get into this trade for $1.65. My maximum reward's $4,800. Of course, my maximum risk is $165. I now have almost a 30 reward to risk ratio. So the point being here that these trades get a lot juicier, a lot more favorable when you have elevated markets, elevated volatility in the markets. So here's another thing I really liked about butterflies, and I hadn't totally experienced this when this happened, but I'm going back to February of 2022, and on the 23rd, the market closed here at about 4,400. The next morning, we had a massive gap down, over a 100-point gap down. I don't even remember what the event was, but I remember from my prior trading, when I was largely directionally trading things, when I would wake up in the morning and see that, I'd have this pit in my stomach, like, oh my God, what am I going to look at when I open my screen? And I had on a lot of butterflies at that point. So I want to show you what I saw when I popped that open. So the night before, on February 23rd, I had one, and some of these are condors, some of them are butterflies, but they're all a basic butterfly configuration. On the 23rd, near the close, I was up about $1,100 in this trade. That next morning, this trade was up to $2,300. So it was up $1,200 in a 100-point down move. Then I had this position on. This position went from $1,898 in profit to $2,100 in profit. So it was about $215 higher profit. Then this particular trade, well, I was already down in this trade. I was already outside the other side of the butterfly on this. Probably should have adjusted it well before this down move. I was down $2,000. The next morning, this trade's down $2,100. So it went $65 worse to the downside. Then I had this big kind of condor butterfly thing on. Well, it went from $4,800 in profit to $5,000 in profit. So then here's another one. Again, similar sort of scenario. It went up about $650. This one was up about $250. So from my perspective, after going through that massive drop with all of those butterflies and seeing how they reacted, it just further enhanced my interest in continuing to study and trade butterflies. Now, keep in mind that all of these butterflies, I don't tend to trade them close to expiration. The closer you get to expiration, the higher gamma gets, the more a big move like that will impact you. So my goal is to get into these things very, very favorably. We talk about how to do that in the class, and then phase out of them over time. Now, I've got a number of other things to show you, but are there any questions on what I just covered? Because it's going to be important that you at least have a grasp of those concepts before I step forward. And I'm not seeing anything coming into the chat panel there right now. So I'm going to move on. If something does show up, I'll circle back to it. If the market spikes up, the opposite will happen. It will to some extent, but many of those butterflies were in the middle of their tents, so I wouldn't expect that much to happen. Also, the market usually doesn't gap up 100 points, okay? It can, but it doesn't usually. I think you've probably heard the term the escalator up, the elevator down, or something like that. And with the VIX being low right now, am I still trading butterflies? I am, but as I mentioned, if you were on at the start of the call, I'm scaled way back in them right now. And I have to know that I'm expecting my monthly income, my monthly paycheck is going to be a little lower when I'm only using 25% of my account. So I have to plan for and understand that. But I am also at the same time, as we're going into earnings season, the class and I are doing a lot of earnings diagonals, earnings calendars as well. So that's kind of offsetting the income right now. And Gebhardt, I'll show a little bit of the calendar trades. You'll see them a little bit, but the goal here today is not to get deep into calendars. Calendars are, they model very differently than, they do very different things than what any modeling shows. And that's going to be what my class is all going to be about when I get to doing that class here in the next couple months. So what am I going to bring to the table here today? Well, I'm going to tell you a little bit about the deep dive butterfly trading class. We're going to talk about butterfly and calendar oriented trade group alerts. I'm going to show you some results from many of the Aeromir people here are in that group at this point. Since December 1st, when I started this group, these are the results. We're going to take a closer look at those here in a few minutes. But those trades at this point have yielded about $11,000 in profit. It's a good looking equity curve. And this is kind of a combination of the different trades we've made. Our trades could be entered with as much as about $2,000 in max risk at the level that I share them with students. Most of them are going to be less than that. So I try to keep the trades fairly small. Some of the earnings calendars we did today only had about $200 in risk. We closed one out today in Netflix for about a 30% overnight profit. I think we went into that one with about $200 in risk. So many of the trades are going to be much smaller in risk, but when we're trading SPX, I like to trade 2, 3, 4 lots of butterflies so that we can phase out of them over time. So a little bit about the deep dive class. Let me show you kind of what that includes. So this is just a little bit of a course outline. So class number 1, which is about 2 hours long, it talks about, my study of butterflies, kind of how I have traded hundreds and hundreds of paper trade butterflies, and then hundreds of live butterflies, and I share you all those results. We get into the anatomy of a butterfly, which is part of what I just walked you through here a moment ago. One of the things that a lot of people don't understand is exactly where does the money come from in a butterfly? How does that money end up dripping into those over time? So we take a look at that. And again, some of this may be beneath some of your current skills. I know many of the people in Aeromir are more experienced traders, but it's really important that everyone has that same framework to start from as we move forward. And then we look at butterflies in high volatility, low volatility. We look at different types of flies, the 60-50. We look at butterflies before or after earnings, trading them around stock. Now, again, I usually don't trade butterflies for earnings. I have found that calendars have worked much, much better for me. Part of what people will receive if they end up taking what I'm going to share with you today is there will be an earnings comparison where I take CVS, the pharmacy company, and I trade around earnings. I trade a butterfly, an iron condor, and a calendar, do essentially the exact same trade. These are live trades. I trade all 3 of them on CVS over an earnings announcement, and we contrast and compare how all 3 of those reacted. So that'll be part of some of the lessons that, if this is of interest to you, you'll receive. The second class is about 90 minutes or so. We get into an analysis of all the symbols. Great question, JH. So yes, I did give a class like this last year at Aeromir. I would say this is similar. It's going to have probably about 60% of the same content, about 40% new content. The last class at Aeromir was the very first online class I had ever done. So it was a little rough, a little clunky. Hopefully this one is much more polished and much better. So yes, I know, I apologize for that, but everybody's got to start somewhere. So anyhow, and then we're going to get into the impacts of implied volatility and then also DTE. So how do we decide how many days out to go on these? What are some of the considerations we're going to use in doing that? What are the volatility, the IV impacts? We're going to do technical analysis where we're looking at the market and we're making some market assumptions as we look at it. And my goal is I show a bunch of examples where I show students different market conditions, a different chart of the SPX, and then we discuss about what trade you would use at that particular market point. So that's going to be, part of this second class is learning to analyze your current market conditions and then making a decision on what butterfly might be best to use in that market condition. Then we spend some time, what I call lab time, where we look at trades and go through all of the vulnerabilities of those. In other words, if this trade were to fail, how's it going to fail? What conditions would cause it to fail, etc. Class 3 is all devoted to downside adjustments. So that's a possibility, JH. At the end, ping me. If you were a prior student last year, I wouldn't rule that out. I haven't given any thought yet, so I'm not going to make a commitment for sure on that one. But so the deep dive butterfly class number 3 is all about downside adjustments, and we look through a whole series of different potential adjustments and the pros and cons of each, and when and how you might decide to put those adjustments on. Number 4 is all about upside adjustments. When the market rips up on us and we're in a flat butterfly, what does that mean? When and how might we adjust that? If we're in a broken wing fly, that's going to be different. So in each of these, when we're talking about adjustments, we have a whole series of adjustments for broken wing flies, and we have a different set of adjustments for the flat flies or the equal winged flies. And then class 5 is just kind of a catch-all. I share with everyone kind of the different tips and tricks and some of the tools I use, some of the best practices I use. One of them that I shared, which maybe many of you already do, is I use my virtual assistant on my desk all the time. I have an Apple product, so I'm not going to say the name because I'll trigger everybody's Apple products, but I say, hey, S, remind me to do this. Remind me next Thursday to look at a Tesla earnings trade. Remind me to, put on a new calendar or a new vertical next Friday, whatever it is. So I am using tools like that all the time. I'm also asking it questions about, what would a 50% return be if I entered at this price? And then I'll know what price I want to put my closing order out at. So just kind of common sense things that maybe many people are already doing, but there's about 90 minutes of different just kind of tips, tricks, ideas, tools, etc. So that is part of this whole thing. That's what the deep dive class covers. And so who should take this class? Well, I would say those people that have historically feared volatile markets. If you're one of those people that, you get to a volatile market and you're like, I'm stepping to the side, this market's too crazy for me, you need to at least understand what these are and how to use them. I'll also tell you that part of the class, we get into hedging long-term positions. So I have, as many people do, an IRA or long-term investment account. I've got a number of butterfly-style trades that I apply to those long-term investment accounts that if the market sells off while my Google and Apple and Microsoft, etc., will be losing value, the big butterfly that I've put on in there is going to be gaining in value to kind of offset those. So that's also something we get into in classes. How can we use butterflies for a hedge? Those wanting to learn ways to, again, I guess I was one off there, hedge their long-term investments. Those wanting to understand the ins and outs of a wide range of butterflies. We talk about all types of different butterflies, not just a broken wing and a flat fly. We get into something called the shark fin fly, or some people call it the Christmas tree fly. So there's different flies that you can apply at different points. We also talk about, I know that many people have specific rule sets around Greeks and things like that for butterflies. What I'm trying to do is maybe take things a step further, and I don't want to take anything away from rule set trades. It's a great way to learn, but what I'm trying to do is really get people to that next level where they don't necessarily need to follow a rule set that says if delta gets above this, do this, because I feel there's a couple inherent challenges with that. One is if I'm trading 10 butterflies, of course, all of my Greeks are going to be 10 times somebody that's trading one. So if somebody puts on a butterfly and they do it in a one lot, and they're saying adjust anytime delta gets above X, and I've got on a 10 lot, well, I've got to mentally jump through all those hoops to figure all those different Greeks out and know when I'm going to adjust my 10 lot, number one. Number two, all the different platforms calculate their own Greeks. So delta on toss isn't going to be the same as delta in ONE. It's not going to be the same as delta in OTA. It's not going to be the same as delta on Trade or whatever else. They're similar in nature, but I want people to understand the fundamentals of a butterfly. And rather than looking at the precision of the Greeks, I want them to understand if you need to reduce your deltas or increase your deltas or reduce your theta or increase your theta. These are the things that you'll want to do. I think ultimately there's more value in understanding how those Greeks get impacted than there is trying to look at an exact specific Greek. So again, the two main things that I have to offer are one, the deep dive butterfly class, and then two, the options trading for income alert service. So let me kind of show you what that looks like. So this is what the alert service looks like here. It happens to be hosted on a platform called Kajabi, which I researched a bunch of them. I like it the most. And we have what we call circles over here. So right now, this options trading alert service, if we click on that, these are all of our current open live trades. Now, students are firing back and forth, asking me questions in here. Why did you do this? What about that? Did you consider this? And I'm trying to answer all those questions. I think the students would probably agree that I'm very timely in answering these questions because the goal of this is to learn. In addition to all of these open trades, I have the closed trades archive. So once a trade closes, like FedEx here, we closed this morning, we closed FedEx yesterday. This was a very small winner. We battled this one for a long time. It was a big loser right after earnings. We worked it back into a small winner. But we closed that yesterday, and then I post the results here, and I put an X on FedEx here. I'm going to be moving that this weekend down to the closed trade archives. The point being that if anyone wants to come in and study a whole series of closed trades, any one of these trades you can go take a look at, and you will see all the details on the trade. You'll see the entry of the trade. Here's a video where I explain the entry, why we're entering, where we're entering. And then there's an adjustment, okay, or here's exit concepts. So every step of the way, I explain and show exactly how I'm adjusting this trade and what I'm doing with it and why I'm doing it. And every one of those steps comes with about a 2 to maybe as long as 5 or 7 minute video to explain conceptually what happened with it. So, somebody could literally go through all of these archive trades, probably right now, 50, 60, 70 of them, and that can be a great educational tool for them. Again, these are our current open trades that we have right now. IBM, we just opened. So here is the YouTube video where I explain I'm going to open this trade. Here's how I'm opening it. Here's why I'm opening it. Here's the maximum risk. Here's where I'm going to enter my order to close this tomorrow price-wise if it is in our favor come tomorrow morning. And then we also just opened this one in Las Vegas Sands. And again, different people in the groups will ask me questions, well, why do you do it this way? Well, I try to respond, again, very, very quickly to people, letting them know my thoughts as to why I did things the way I did them. And then other traders are also chiming in with their thoughts and their opinions. There's some great traders in here, and they've been very helpful and very instrumental in helping me also build out concepts. And then here is our Netflix trade that we opened up last night, just closed it this morning, $405 profit, 28% overnight. So this is what the service is all about. And there's a mobile app for this, and of course the website just like this. As soon as I post something in there, you'll get a little bing on your phone or a little bing on your browser, and you'll be able to see the video of exactly what we're doing, why we're doing it, how we're doing it. Hello, everyone. So for purely selfish reasons, I'm going to go ahead and close out my Netflix trade. I do think there's likely more that could be pulled out of this. However, I'm going to be doing a session here on Aeromir or at the Aeromir site in about 30 minutes. And I don't want this thing kind of popping off in the middle of my presentation. So I don't need to play through that whole thing, but again, that's the type of thing that I put out where I show exactly what I'm doing in a trade, why I'm doing it, and then I update everybody anytime I get a close or a filled order. So that's kind of the whole process here. Again, my goal is to not just provide an alert, but to provide the thought process around that alert and help people better learn, how a professional trader thinks, how they think in terms of risk and reward, things along those lines. So let me come back here. So that is the income alert service. And the things you should know if you're going to take part in this, you should have a general understanding of options and Greeks. You should have a basic knowledge and a basic experience with analytics diagrams, kind of understand if you're using TOS or you're using OTA or you're using ONE. You should kind of understand how those analytics diagrams work. You should have some basic experience with some sort of an options trading platform. And ideally be willing to get a subscription to one of these services because I find that they're very, very helpful in keeping track of all your trades. Again, you'll see some of my stuff right here. So I use Options Trader's Assistant, and let me just drop into my account here. This is all live trades, and we'll take a look at what's happening in some of the different classes here, or excuse me, some of the different groups, if you will. I've got this divided up a couple of different ways. I need to move my bar out of the way here. I'm not sure how to move that. Anyhow, so when you open up Option Trader Assistant, it takes you to the dashboard. It shows you your month-to-date performance, things like that. Keep in mind, this is not all class performance. This is personal performance as well. And this kind of shows you all of the existing trades that you have open. What I'm going to do here is I'm going to go straight to the graphs page. And the graphs page is really where I live. It's kind of my instrument cluster, my dashboard that shows me all of my open trades. I'm going to focus, you can see when it says class here, those are different class trades that are open. Okay, so this one's going to expire here on Friday. It's locked in $157 in profit. And if we get a big pullback, it's going to be a little bit of a lottery ticket for us, but there's no risk of loss there. JH, is this better than one? It depends on what you're looking for. I've done on my website or my YouTube channel, and then Tom also has posted, I think, a session that I did where I explain ONE in detail, or excuse me, OTA in detail. I like OTA because it's web-based. I can run it from my iPad. I can run it from my phone if I want. And the other thing is it connects directly to my broker. I don't have to have a platform open. It just directly feeds into here. I enter my trades from here. I exit my trades from here. So everything is done right from here. I know that all my fills are reported exactly as I receive them, where with ONE, I personally would do some fat finger stuff and I would enter the wrong prices. And sometimes that would create issues for me. So there's a whole bunch of reasons that I really, really like this. I will say that the one thing that OTA does not have at this point is they don't have historical data to spin back to a point in time and do paper trading going forward. That's not a big deal to me because I can do that in Thinkorswim using the on-demand. So I guess it depends on what you're looking for in a program, but the fact that this is web-based to me is it's just a game changer in that respect. So real quickly, so this is a trade we just opened this morning on IBM. While it's up $20, that's meaningless. It'll really matter tomorrow morning where we're at. This is another one, earnings calendar on Las Vegas Sands. This is an SPX calendar we have open that's up about 10% right now. This is, let's see, what do we have here? This was a flat fly. This fly has been kind of a pain because we had to adjust it a lot since we opened it. And we're not going to get much in profit out of this one. I kind of know that going in. So, but we're still working with it. This one in rut that we did, and I don't usually trade rut, but this is going along nicely. We're up about $1,500 in that. Down a little bit in this JP Morgan earnings trade, but we're kind of working through that. And then these are some personal trades of mine. So this is kind of the complexion of what we have in the class. And then let me just show you a few quick reports here. So if I come into class trades, I've set up some filters. If I want to look at all my closed class trades since December 1st, this will show me a report. We've had 7 losers, 37 winners. These are all the stats right here. So the class trades are up about $10,800. Here's all the individual trades. And then we can look at a bar chart of these. We can see here each individual trade, the P&L on each individual trade, or in the case of yellow, the loss. We can look at the equity curve of those trades here. So been performing very nicely. I will say that, this is unlikely to continue at quite this pace, partially because volatility has dropped on us a little bit. But the bottom line is it's been a good run. We can also look at just earnings trades, for example. So these are just the earnings trades that we've made. So I can slice and dice these a lot of different ways. Is the basic OTA plan sufficient for your approach? What I'd recommend, oh, hi, Larry. Nice to see you. So Larry is one of my Option Alpha people that I worked with there. A great guy. Great to have you here, Larry. Hope all's going well. Larry, however, I got to say, he's a PC guy, and he told me about 4 weeks ago he got a Mac. So I'm going to be very interested to hear how that goes, because he was diehard PC, and we always kind of poked him at Option Alpha saying, when are you ever going to get a Mac? So that'll be interesting. But anyhow, as far as the plans, I'd urge you to sign up for the 30-day free plan, and you can get that through me here. Let me just, let's see, I think I've got a link I can share with you. So this link here will give you 30 days free of the most advanced plan, and then you can kind of decide from there what works best for you. Let's see. So I think that's about it with OTA specifically. Is there any questions that anyone has on OTA that, again, this isn't designed to be an OTA presentation, but if there's anything specific that you'd like me to share, I certainly can. And not seeing anything there right now. So, Tom has an affiliate with OTA. So I see he just posted that there. Tom, I should have asked you that first. I apologize. Use Tom's link, and it'll give you the same 30 days. So go ahead and sign up with Tom's link for the 30-day free trial. And can I drop that's what just dropped in right above you here. I think that's...
I think I just sent it to Larry. There's to everyone.
Oh, okay. All right. Thank you, Tom. So yeah, so use that link, and that will give you 30-day free trial. So let me just kind of wrap up my presentation here. So one of the things that I talked about a little bit in rule set versus understanding the trade, again, many of the trades, and I love Amy. I've met with Amy a number of times. We talk regularly. And her trades are rule sets. And I learned by trading a lot of those rule set trades. But I never quite took market considerations. In other words, what is the trend of the market? Has the SPX pulled back to a support point? Things like that. I was kind of blindly following the Greeks. And if the Delta gets above this, do this. Well, I want to take a more holistic approach where I'm teaching people how to analyze the markets and then combine these trades with those market considerations, as opposed to just being totally Greek driven. So, and again, we're going to make trades we're going to analyze a wide range of variables as we do these trades. I'm not going to show you the video there. You've already seen some samples of some of the videos. And so what I'm proposing or what I'm offering up to the folks at Aeromir is this package, which is going to consist of 5 calendar trades. This is about 2 hours of video content. This is where one of those trades is comparing the 3 different versions of trading CVS. So we're going to do the exact same risk-reward configuration in a butterfly, in a condor, and in a calendar, and we're going to walk through how each one of those performed. And then there's also going to be 4 other detailed calendar trades. This is not a deep dive calendar class. That's going to come in the future, but this gives you a pretty good walkthrough of calendar trades, kind of how they work. And that's normally $49. Then 5 butterfly trades. So this will kind of show you 5 butterfly trades of varying complexity that we walk through as well. Some are in SPX, some are in individual underlying stocks. Then the options trading alert service is normally $149 a month. And again, I'm in the package. This says $298 because I'm going to give people 2 months for free. The deep dive butterfly class is normally $994. And the closed trade archives, if somebody wants to subscribe to that, it's $38 a month. So this is $1,400 in value. And for the Aeromir folks, I've got an offer for $695. So that's what I'm going to offer up to everyone in Aeromir, is you would have access to all of these. These are some of my students. I think most of these are also in the Aeromir group here as well. And then this just came in from Chris this morning. I'll play that. I edited this down to just a couple seconds, but this literally just came in this morning from Chris when he completed the butterfly class last night.
So I think overall it was a fantastic course, and I really recommend it to anyone who's looking to make an income from trading options.
So anyhow, for how long? It's the first 50 people is what I've got this set up as. So let me just post that link as well. Aeromir first 50, and that is the details for that offer. Also, if you're not quite ready or you're not sure, go to the website, sjgtrades.com. Let me put that in here too. And if you go to sjgtrades.com, that the 5 butterfly trades, which is about an hour long in and of itself, if you're not sure, do I want to buy butterfly, or excuse me, do I want to trade butterflies, don't I? I don't know that much about them. If you go to the website here at sjgtrades.com, click on the free butterfly training video, sign up for future emails, etc., you'll get a link to that 1 hour class. I say class, the 1 hour session where we walk through trading 5 different butterfly trades start to finish. How much time does it cover? Richard, I'm not totally sure I understand the question. With this, you have the 7+ hours of the butterfly class. You have those other various sessions that I shared. Let me go back to that. So you'll have this, which is about 2 hours. This one's about 1 hour. The alert service, you get 2 months for free, and then it starts charging you $149 a month. You can drop it at any time. Then you get the deep dive butterfly class, which you'll have access to in perpetuity. And again, this is the 7+ hours. And then you'll have the closed trade archives as long as you're a member of the alert service, and you can, pour through all those closed trades and play them back, learn from them as well. So, okay, yeah, that answer. I'm sorry, Richard, I didn't fully understand the question there. So, also, I have my YouTube channel where I share a fair amount of content, and Facebook. I'm not a real big social media guy, but I have been posting some things off and on Facebook as well. So feel free to check things out at either one of those locations. So at this point, fire out any questions you might have. And if you don't have questions, I thank everyone for showing up today. And if I can answer, let me do this here. Let me give you my email address too. So if people have questions, feel free to ping me there. Are the alerts copy-paste trade format? They are not, Greg. So I went back and forth on that. But I will tell you that one of the benefits of OTA, and Charles, the founder of OTA, is going to be walking me through this in more detail. In OTA, there's a button I can hit when I enter a trade that will copy all of the parameters of the trade, that then when I send out the alert, I can send out that link. And if you're also using Option Trader's Assistant, you can click that link. It will open right up in your platform, and you can hit the send button. So I will likely be doing that in the future. But one of the things I don't do the copy-paste format is a lot of the different brokers use different formats. So it's a little bit awkward to try to figure out which one. I think TOS is probably the predominant one out there. But at this point, no. The answer to that question is no. But there's also a video that explains everything. And again, part of my goal is to show you what my thoughts are, as opposed to having you just copy my trade exactly. I want you to see what I'm doing, why I'm doing it, how I'm doing it. And you may have a slightly different market opinion than I have. You may say, Steve, you're nuts. The market isn't going to rally up from here. Therefore, I'm going to do a slightly different configuration on this trade. That's what I ultimately want, is I want the people in the group, the students, to be thinking for themselves, look at the critical way that I think things, and then make your own opinion. So, all right, I think that's it. If there are no other questions, the discount for former students, just let me know. If you would, JH, email me. I gave you the address up there, and then anybody that was a former student. Again, no promises right now. I'll take a look at that. I may consider a discount to those folks. Again, there's a lot of other things that wasn't included last year, as you saw, the 2 months of the service, the additional video content around calendars, etc. So none of that was in last year. But I won't rule out a discount because I appreciate you guys getting me started a year ago. But just email me and I'll give that some thought and get back to you here in the next day or two. So the first 50 people, that is available to you. Outside of that, you'll need to purchase things individually. Thank you so much, Tom. I got in just under the hour, so hopefully we're all good there.
Yeah, well, I mean, it's not exactly hard and fast. I like to do it under an hour, but there's, if you need to go over, that's not a problem. So, but thanks anyway. I guess Richard's asking for a link.
Okay, let me put that out there again. I thought I had, but just in case I did not.
I'll put it in the library too, with the recording. Does that have like an expiration date?
It's not an expiration date, but it is a
this number.
Yeah, it's the first 50 people at this point. I don't know why it's. Let's see here. Let me. There we go. All right. So that hopefully that link will get you there. And again, I appreciate everyone's time. Thank you so much. Richard, thank you for asking for the link. I thought it had shown up earlier, but if it did not, obviously that's an important piece of this puzzle.
Oh, wait, you know what? You just pasted it to host and panelists. Let me paste it to everyone.
That's probably what I did before. I didn't. Oh, shoot. Everything I posted, I didn't. All right. That's something I wasn't aware of. I had posted. Well, I don't think I posted that much more. I think I posted a link to my YouTube page, and I think that was about it. So we should be all good.
I'm going to save the whole chat because I have access to everything, of course, and then I'll make sure that all the links that are supposed to be in the chat are actually in the chat file.
Thank you, Tom. I really appreciate it. Thank you, everyone, for your time.
All right. Thanks, everyone. Thanks,
and Larry, nice to see you. Take care.
Yeah, good luck with the Mac, Larry. I was a Windows guy for a long time, put a Mac I had a Mac and a PC on my desk side by side for a couple of years, but in the end, I went back to Windows just because all the trading software I was using is with Windows. But I do love the Mac; it's a great platform, so I'm sure you'll enjoy it.
Especially the new M series chips that are so fast and so quiet and so they don't heat up at all. My former Intel chip Mac, the fan would be spinning 100 miles an hour right now. It'd sound like a jet taking off in here, but the new M1 fan never even kicks on.
Now, a jet engine to me is like music. So,
Yep, I imagine it is. All right.
all
Oh yeah,
right,
Lindsay's using
we'll see.
M1 and love it. Hey, Lindsay, nice to see you. Lindsay's one of the people that's in the alert service as well. So nice to have you here,
Cool.
Lindsay. Thank you.
All right. Well, thanks everyone.
All right. Take care. Bye.
Yep. Bye.